Welcome back. Well, Neeraj Charawar, who is the head of quantitative equity research at Axis Securities, joins in on the show now to discuss some key themes to focus on this Diwali. Neeraj, hi, welcome to the show. I was just going through your report, and one of the big themes that you're propagating is the entire consumption play. And within consumption, I would assume that you're also looking at, probably stocks such as ITC as well as Indian Hotels. My question to you is that both these stocks, for example, have already seen a strong run this year. How much are you probably anticipating incremental upside from these levels, and what's your rationale?
Yeah, thank you for having me on show. Right now we are for 2017 we are bullish on five themes, and consumption is one of the theme out of these five. So we are seeing under consumption multiple categories are witnessing uptick as compared to pre-COVID level. Under consumption we are very bullish on ITC. ITC has given an all-round performance on CY22 basis, and it is deliver on all the scale. We believe that given the environment, ITC is well placed among all the FMCG players, given the valuation comfort. With 3 to 4% of the dividend yield, these stocks provide a bigger margin of safety among all the peer players. Based on the operational performance, their cigarette volume is picking up, and other categories are also firing on all cylinder, like whether it is the travel and leisure or the paperboard business or the agri business. We believe that for 1 year perspective, this will be a very well RTC is well placed to deliver 12 to 16% of return in next 1 year basis. That is one bet. Second, we are under consumption. We are very bullish on the QSR space. QSR is the fastest growing space in India, and in QSR, Westlife Development is well placed to deliver the fastest return in upcoming year, because we believe that the SSG growth is picking up for the Westlife Development, and there is a huge scope of expansion in terms of store expansion. Company has guided for 200 store opening of 200 store in next 3 to 4 years, and every year they are opening 40 to 50 store as compared to 20 to 30 in previous years. So we believe that there is a huge scope of expansion, and that will lead to the higher margins for the company, and it is well placed to cater to high margin category, entering into the high margin categories of fried chickens and McCafe, and this will deliver a superior return profile for the company. The third peak in consumption, especially in travel and leisure space, we are liking Indian Hotel. We believe that the hotel industry is gaining the momentum after the vaccination drive, and we believe that this is not a story of 1 or 2 quarter. There will be enough pent up demand in the market. There is enough demand coming from the travel, leisure, wedding. Along with that, some corporate demand is back into the picture, and Indian Hotel is well placed to deliver superior return here onwards. We are bullish on as the company has more going towards non-cyclical business, and these non-cyclical business or less cyclical business are very margin accretive, and their margin profile is likely to go improve here onwards. So that these are the three space in which we are bullish on consumption side.
All right, we take that point. One of the themes that you have are also balance sheet strength. I just wanted to understand where do you see balance sheet strength and the maximum benefit of that, a bunch of stocks there?
So balance sheet strength is a core theme. We are witnessing multiple levers of balance sheet strength across the board. The corporate profitability of NSE 500 universe has increased to 10 lakh crore in Q1 FY23, and this is led by four sector, that is financial, metals and mining, oil and gas, and IT sector. We believe that the balance sheet strength for financial space will likely to stay over here, and this will deliver a superior return in upcoming years, because the entire banking system has cleaned up superbly in last couple of years. Asset quality trend has improved, and we are also seeing a demand uptake in terms of credit growth. And this will and valuations are reasonable at current level, and this will make a case to increase allocation towards especially the financial space. And under financial, we are bullish on housing and banking is a theme. So for banking, we like IDFC First Bank. So recently we come up with an initiation in this particular space. We believe that IDFC is well poised for re-rating in this space, because company has shown asset quality improvement trend from last 6 quarter. and this trend likely to continue, and company has enough level to improve the credit growth in upcoming years, and that will convert into profitability and superior return ratios. So that is one bet. Second, we are bullish on housing space, and we are betting on Aptus Housing Value Finance. This is a very is a housing finance company predominated into South India, and company enjoys the premium and having a pricing power in the niche category of lending to self-employed people, of low and mid-income people. We believe that this is a very less competitive space and
Sure.
fastest growing space with economic pickup. We believe that the AUM for this company to grow at a 26% CAGR in upcoming years, and this will translate into higher ROA for the company. Along
Okay.
with that,
Sure.
we are
Neeraj,
bullish on the CV space. Yeah.
Neeraj, we've completely run out of time, but we have to wrap up the conversation on that note. It's been a pleasure speaking with you and listening to all of your picks. And we'll do one thing, we'll upload this entire conversation on social media so it can be easily accessed at our, in the comfort of time for our viewers as well.
And also, if they flash all the top picks that they have for
Yes.
him, we have his top themes, but the top picks that Neeraj has spoken about as well
We'll try and put
should
that up.
come up for you on the screen.
We'll try and put
up.
that up on Twitter as well and social media for our viewers. But as of now, we need to take a short break. Here's some great news, however, for our investors. You can now track US market action real time on